Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I've had a request from a few brothers that wanted me to look at this specific company, and that's exactly what we're going to do. So I'm going to try to make the video as short as I possibly can, give you as much information as I possibly can about this company. Just to be transparent, I do own this company in this portfolio, and I'll share that with you guys at the end, how many stocks I own and what I'm going to do in today's video. And then I'm going to do a little bit of buy-in, inshallah, towards the end of the video. So stay tuned for that. If you have not joined us on Patreon account, please do so. It does help the channel, and you get access to all the buy sales. You get dividend trackers, the dividend calendar spreadsheet, the stock watch list, the ETFs, the private Discord where you can actually join a group of brothers and sisters who are actually sharing good practices. And if you are basically new to investing, have a look at the Sharia compliant investing ebook, which I put together myself. So let's get started. If you haven't liked the video, please do like that as first. Okay, the company that we're going to talk about today is MSCI. This is one of the companies you probably don't see many people talking about it. They've reported their earnings very recently, and the company became a public company in 2007, so it's not really old company. This is the company that has basically benchmarks a lot of the assets out there. They work with a lot. Basically, they have a data and software to basically provide data and software to asset managers and asset owners. So they like the benchmark, if you like. They hold over 15 trillion in benchmark assets, which is quite nice to see. And one of the main things I like about this company is that the fact that they have a subscription based. So a lot of their products is basically subscription based, which is quite nice. That means, okay, they have a strong retention and pricing power. So that's why the company has a wide economic moat. So it's not that easy to move away from this company to another company that provides you data and so on, to basically get your data and so on. And about 41% of the company's basic revenue comes from the asset-based fees, which is quite large if you think about. One of the things that they do is, and one of the main things that kind of a little bit worries me at times is the fact that a customer concentration basically for this company says is real, as BlackRock makes up almost half of MSCI's asset-based fees. So BlackRock uses this company as a benchmark for a lot of the, but I can't imagine basically BlackRock changing all of a sudden that, because that's not going to happen. That's going to stay. So because look, they signed a 10-year agreement with BlackRock that does include some pricing basically concessions, which is quite nice to see. So overall, good company. A lot of their revenue, of course, like this is kind of, I'll show you the breakdown in a second where the revenue comes from. As you can see here, the analytical side of things is about 25% of their revenue, which offers basically that software subscription that we talked about earlier. The ESG side of things is about 10% of the revenue and is growing basically, basically one of the fastest grower for this company. So that's just to kind of give you a bit of an overview of the company and basically what the company does. So it's not one of those companies where you have, you know, just one or two products. Is the fact that they're doing the data analytics, they're doing the ESG, they've got the benchmark side of things, and of course that the fact that their subscription model is absolutely amazing, and the fact that a lot of the basically revenue for 10 years, to have a 10-year agreement with companies like BlackRock, I can't imagine BlackRock going out of business anytime soon. So for that reason, I actually like the business, and I like the company's basically business side of things. So what I'm going to do now is I'm going to give you an overview of the entire company in terms of financials, and of course, as always, please do your research. They, of course, in the financial sector, like I said earlier, 97% of the revenue is basically a recurring revenue, which means basically it's kind of subscription based. Every single month these companies have to pay for it, or every single year, and so on. Now, currently trading $471 per share, EPS of $14.65, and it has a market cap of $37 billion right now. It has a wide economic moat, as we've seen it early, and it has a beta that's slightly higher. Beta lower than 1, that means basically it's good. Beta higher than 1, it can be very volatile stock if you want to, just to kind of make it simple. Current PE, we're looking at 31%, 31. And in comparison to the sector, which is about 12. Now, the sector that we're talking about here is the financials. And financials are normally full of banks and so on. So for that reason, I wouldn't actually worry too much about it. But the S&P 500 right now is about 23. So on to 23. Now, we need to compare this current PE with the forward PE, which is about 31. And the 5-year average PE for this company is about 44. So this company has been trading very expensively for the last whatever years, and price to free cash flow right now is about basically 30. So it is basically where it's cheaper in comparison to where it has been over the last 5 years, which is important to us. Now, annual dividend, we're looking at about $5.74, which basically works out about 1.22% of basically dividend yield. Payout ratio 41%, and latest increase was 16%. The 5-year growth rate for this company is 24%, and the growth dividend streak basically of 9 years. So they've increased that dividend 9 years in a row. Safety 61%. We're looking for 60 and more. Free cash flow right now is $1.1 billion. Free cash flow yield of basically for the trailing 12 months of 3.4, which is normally we're looking about over 3%. Free cash flow margin of 45%, and normally we're looking at about 5%, which is quite nice to see. Profit margin 45%, operating margin 54%, and total return the last 10 years we're looking at about 28%. Return on invested capital 35%, and revenue growth in compound annual growth rate over the last 5 years we're looking at about almost 12%, which is quite nice to see. EPS more or less about 22%, again absolutely wonderful to see. Current ratio, we want to see the current ratio above 1, and the reason is because that means the company has enough liquid asset to actually pay off any current liabilities, which means in the next 12 months they have enough liquid assets they can actually use to pay off any liabilities within the next 12 months. So anything above 1 is what we're looking for. Valuation, now growth estimate for the next year, of course, 13.5% according to Seeking Alpha analyst, basically Seeking Alpha, not Seeking Alpha, Yahoo Finance. Growth estimate for the next 5 years, they look and per annum is about 13% as well. We've already seen the current price. According to Morningstar, basically they're saying $460 per share is basically where they think the price should be. So it's currently fairly valued, and I think we've seen here, if we just go back here, you will see so it's fairly valued around 3 stars. $460 per share is where they think that price should be, and that's basically what you've got in here. According to Simply Wall Street, it's actually saying 3% undervalued right now. $483 is basically where they think the price should be. According to TipRank, 623. Basically these two more or less use the same sort of analyst. So 623, 33% upside from where we are. It's a moderate buy according to them. And then average price from Seeking Alpha, $547 per share, 17% upside from where we are. It's a buy, of course, from them as well. Like I said, these two kind of very bullish on this company. When it comes to Sharia compliance side of things, 99% in terms of business activity, business screening side of things. Interest bearing then about 10%, which is absolutely fine. Interest bearing securities is just less than, it's about 1%. And as you can see, they're buying back their own shares, which is absolutely wonderful to see. We like when companies are buying back their own shares, because that means they're actually using some of the cash they have, especially if they're buying back their own shares when the stock is quite cheap, and they have been doing that since 2014, which is wonderful to see. And the final thing I want to show you is we're taking all of this information into consideration, including the discounted cash flow model that I used, which gave me about 400 in terms of valuation side of things, intrinsic value, dividend discounted model of 471, average intrinsic value that gives us $472 per share for this company. Right now is exactly around that area, 471, and that means basically this is flat in terms of what is exactly where we expected it to be. Now you might be thinking, do you know what, moving forward I want to make sure, okay, I have some sort of a margin of safety. So you could do that 10%, that will be $425 per share. You might say, do you know what, this might be a volatile stock, or I'm not sure about this, the way things are going, the markets come down, when it comes to BlackRock, so ETFs and index funds might come down, For that reason, I want a little bit more margin of safety. Then you're looking for about $400 per share. I've not seen this company trade around that basically for quite some time, and I think for the years down, I think it's down about 16% for the 1 year. Now to show you earnings moving forward, just based on these 18 analysts here, which if you just focus for the first 3 here, you can see when it comes to EPS is about 9%, 14%, and then basically 13%. When it comes to revenue, double digits almost again for the next 3 years, which is nice to see as well. So nothing for me huge to worry about moving forward with this company. I do own the stock in my portfolio. It's been one of the newish companies that I've been buying lately, and I'm down I think about 10%. So my average price is $532 per share. And now what I'm going to do is basically buy a half a share as always, just to show you guys. So I do own now 6.5 shares, so I'm going to round it up to 7 shares, and I'm going to send this to the market, okay, and hopefully that will get executed and so on. So yeah, that's basically what I wanted to the company that I wanted to share with you guys. As you can see, that's already been reflected, and the $528 per share is basically still my average, and 52 cents cents, of course. Right, there you go. That's the company that I wanted to share with you guys. As always, you know, I'm going to keep doing this, inshallah, share my journey with you and so on. And if you are interested in any of the companies that we always talk about, please do your research. This is not financial advice, of course, just to kind of show you what I'm doing with my basically portfolio. And some of the companies I talk about, sometimes I do own them, and I will share that with you guys. Overall, the portfolio is doing okay, so about right now about 13% up, which is quite nice to see. And I'm going to keep basically dollar cost averaging every single month into this portfolio, as well as the family portfolio. If you haven't seen the family portfolio, join us in the Patreon account where you can get access to that, inshallah. Have a wonderful day. Assalamu Alaikum.